All right. What is up, traders? What is up, tycoons? Super excited for today's video. We're going to talk about one of the most slept on sectors in today's video, and one that I've been saying I think has a lot of potential in 2024, and that is going to be China. Okay, now there's lots of other themes. We've seen lots of market rotations this year. We've seen utilities leading the way now. Previously, we just saw energy, materials, commodities leading the way. And it's a much different market environment. We're still in a bull market, but it's a different bull market than 2023. And just simply riding AI stocks and buying the highs on AI stocks may not continue to work for you as it's done in 2023. And there's lots of evidence in that. So we're going to talk about some of the leaders and laggards and show you guys how China is really outperforming. And then we've got some stuff here, some charts from Renmac, okay, that aren't the simplest to the eyes to the, regular viewer. So I have some of my own charts on here that are a little bit cleaner, maybe simpler to understand. All right, we'll go over the excessive negative returns in China, the excessive outflows in Chinese tech. All right, and we'll go over some tweets and different stats and data about China emerging markets in today's video, and go over some key patterns really that I'm watching right now when it comes to these sectors and when it comes to these ETFs. Now, as always, though, the content provided on this channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter for you guys called Investment Intelligence. Putting those out every Wednesday and Sunday, and then I'm going to try and sprinkle in some other ones whenever I can, giving out free finance and trading related content. And I also try to sprinkle in some trade ideas in there as well, showing you guys some chart setups and different things I'm looking at. There's a website associated with it. So if you want to go back and look at some of the previous articles, right, when they were published, or just check it out before you subscribe to it, you can do that via the website, right? Now let's get into it here and let's talk about year-to-date sector performance. We see the MSOS, which is actually one of the cannabis ETFs. I can't remember at the moment if it's the more American or more Canadian-based cannabis ETF. But some big news in that one. The cannabis stocks oftentimes tend to be very pump and dumpy. So I don't overstay my welcome in those. We did have a couple good trades on a couple cannabis stocks. But look at KWEB out here, even outperforming semiconductors. Okay, now KWEB is a Chinese technology ETF. Now, this is what I mean by it's not the same market and it's a much more difficult market, right? These are the leaders. Look at the laggards over here. We have ARK. Now, if I was to tell you that Chinese tech stocks are pumping, that semiconductors and tech stocks are having a pretty good year this year, you would think that something like ARK Innovation would be doing well, right? The ARK ETF, but that's really not the case that we're seeing here at all. Now, this is the Shenzhen CSI 300 index. Okay, this is basically kind of similar to their S&P 500 or NASDAQ 100. Now, Renmac is basically saying, there was a nice divergence right here, and they're looking to see if we can get a 50, 200-day moving average crossover. Now, this is something known as a golden cross. It's not honestly the most reliable thing ever in time, but it is a well-known phenomenon that occurs in the stock market whenever you have the 50-day moving average crossing above the 200-day. A lot of people do look for that. Now, when I look at the chart, right, I just see a clear downtrend. All right, if we go back to some of the 2022 highs here around the middle of the year, summer 2022, we just draw a nice little trend line there. We can see we are on the verge of breaking out right now at the moment. What's also really interesting about this is that we are crossing above the 38.2% Fibonacci. Now, if you're not a huge fan of the Fibonacci's, it's not something that you have to live or die by, but it is something that I really focus on a lot, and it makes my trading a lot easier. Okay, these are your levels here, and when you break above or below certain levels, you're looking to be long or short. So there's a lot of things combining right now at the moment. We are breaking above our 38.2% Fibonacci. That's going to be 3650, all right? And so above 3650, you're targeting 3987. That's a nice move right there. 330 points is a very nice move. Okay, to the upside is for your next target there. All right, when it comes to the CSI 300. Now the RSI breaking out here as well. Okay, you can see we've had this little bit of a shelf right here, and we got to look above and fail. Right, we had a false breakout, look above and fail, whatever you want to call it. All right, these false moves often lead to fast moves. This is something that I've been trying to share with the audience. Just that phrase is very, very helpful, right? You see a false move here, a false breakout, and then what do we see in the price, right? We get the false breakout on the RSI, and then it leads to a very fast move to the downside, right? And that's exactly what we saw here from 4,200 all the way down to the low 3,000s here. And we're starting to see some movement. This blue line right here is what's known as an anchored VWAP. So this is anchored to the lows, right? This is anchored to the lows that we had. And so this lets you know where the average buyer and seller is, based upon where we're trading above or below the anchored VWAP. And you can see we started to show signs, right? We had a little bit of this false top, right? So we started to show signs of a topping pattern here. And rather than breaking through support, we actually broke out here. Now, this is something that you see in bull markets is you see these failed topping patterns, right? And that's actually the next edition of the newsletter that I have is going over this, right? And going over and just showing you guys the same pattern you see in many, many different areas of the market, many different sectors, all across the market, you're seeing these failed tops. Now, you could also call this, I'm sorry, an inverse head and shoulders. Okay, so if we were to draw a little left shoulder here, a head, and a right shoulder, this essentially is our neckline, right? And it lines up perfectly with that 38.2% Fibonacci. Okay, so no matter how you draw it, there's a very clean setup, and we're going to be looking potentially for a move again of 300 points in CSI. Okay, so that's what I'm watching right here. All right, we already broke out past the 382. We already broke out on the RSI. And now we need to break out on the trend line here. If we can do that, I'd expect to see a lot more China names ripping. Now, one thing that has people looking, okay, for potential buy opportunities is the excessive negative returns in China, okay? Some people are like what they like to call contrarian indicators, right? And so this is a contrarian buy signal right here that we have, basically having these, this is the rolling 3-year standardized excess return model. Okay, so the SERM, all right, and we're basically in the 5th percentile, all right, and so these are areas where you may want to get bullish. Now you can see that when this triggered first back over here in the 1990s, that was a very bad buy signal unless you were just a trader in it for the short term. If you held it a few years, 4 years later, you were down massively. Okay, down massively. Here we are again, getting that first buy signal, okay, based on the contrarian indicator. So we could see some bounces here, but you do want to keep in mind that they could be short-lived, right? Remember, there's a lot of work just to get to the summer 2022 highs that we have to do, and then we're still down pretty far. So we can have a very strong rally and then get rejected and try to come back down. That's one thing you want to keep in mind. Now, there's also been excessive outflows, okay? And sentiment, what this really is showing you guys is sentiment. Sentiment is so bad in China and surrounding Chinese stocks that even with their impressive rallies in 2024, which we'll dive into a little bit deeper, so many people are just like, all right, well, this thing just sucks. I don't want it anymore. Why am I down so much on the China plays? Why don't I have more NVIDIA? Why don't I have more JP Morgan or something like that, one of these other stocks that have been performing really, really well. Okay. Now the Hang Seng Hong Kong Index was up 9 days in a row. The last time was January 2018 and only 21 events ever since 1964. The average 1-year return is 28.5%. The average 1-year drawdown is 10%. So this basically means that you can expect to see volatility, right? A very volatile market. You can potentially see on average 28% returns, but you have these big, large drawdowns of 10%, potentially even more. And the average 1-year max gain is 54%. So this is just a little bit of data, historical data, kind of backing up the thesis that I had at the beginning of the year. And I've had some exposure to some China plays and finally seeing some green, right? Finally seeing some nice green on those. And it's hard sometimes to be patient, but patience is a process, and patience does pay when it comes to trading and investing in the market and really just trusting your analysis. Now, as I talked about, we've seen this really massive performance in China here, but people are still overly bearish on China and they haven't flipped yet, right? Once those investors flip to bullish, that's potentially when we could see a really explosive move in some of these China names. And so what we have are some different benchmarks here, benchmark to the NASDAQ. Okay, so benchmark to the NASDAQ 100. since the year has started, the FXI is the top performer. You have the K-Web here coming in second, and then you have MCHI, and then you've got the CSI 300. All of these have outperformed the NASDAQ 100 this year so far in 2024, and it's kind of happening under the radar. Not too many people really know about this outperformance in China. And emerging markets look really good here as well, okay? We've got Ian McMillan talking about emerging markets looking for the highest weekly close since May of 2022. Got a nice little chart right here as well. This is my chart, and what are we seeing? Another breakout here on an RSI shelf on our weekly time frame. We've got a large base here approaching that 38.2% Fibonacci, which is roughly 43. And then we've also got our anchored VWAP up here to the 2021 highs. What are we seeing, guys? We're very close to that anchored VWAP. We're very close to that 38.2. If this base right here can break, there is, I think, a little bit of overhead supply around the 46 area, but ultimately you're targeting 48, 49. That's going to be your 618 Fibonacci. And I think that that's a realistic goal for where we could head into 2025, heading into the end of the year and, towards 2025. Now, the most impressive weekly candle goes to EM Equity. Okay, this is emerging markets. This is someone else talking about it at Murphy Charts. And what I see, not only do I see this large base here, but if you draw it a different way, I see a volatility contraction pattern, a VCP. Now, this was a really nice pattern that I liked to trade last year in 2023. And it just seems clear as day to me, right? We've got higher lows, we've got higher lows, we've got higher lows here. It's forming a little bit of an ascending triangle, which oftentimes looks like a VCP pattern. But this is a very explosive pattern here. And if we get this breakout, again, we're going to be targeting 48 to 49, which doesn't seem like the biggest move, but that's only your first target, right? And if we go back here above 49, we're going to be targeting 56 and 58. So we could see some really big moves here. Now, last year and into January, XLC outperformed the SPY. Since January, KWeb has outperformed the SPY. SOCL is an ETF that contains both COM and Asia Tech, making it one of the best looking tech ETF charts. So this is another one. This is SOCL is the Global Social Media Index ETF. This is another one you guys want to keep on your radar, right? What do we see here? We see that VCP pattern breaking out. You see a very strong explosive breakout right there on the VCP for SOCL. So emerging markets look really good. China specifically, India has also been really strong. You can check out some of those names. But this also tends to move, and when I say this, I'm referring to China, okay, and the CSI 300 index tends to move according with the copper and gold ratio chart. So in red here, you have the copper gold ratio, okay, and then you have in black, you have the CSI 300. And you can see that the copper gold ratio really had this huge explosive move here, and it could be potentially a sign of what's to come, right? When you see this explosive breakdown over here, you see that the black line follows suit in a very strong downtrend shortly afterwards. Well, we're seeing a very explosive breakout here on the red line, and we're looking to see, is this a leading indicator potentially for China, right? That's what we're paying attention to. Now, hopefully you guys enjoyed today's video. Okay, don't forget to read through the disclaimer. Sign up for the newsletter. The link is in the description for that. You can sign up completely for free. Check out the website, either or. And if you want to, you can join the Discord, the Investment Intelligence Discord. We're ramping it up, and in June, we're going to launch some new features and just different things inside of the Discord. So for the month of May, I'm letting people join for just $1 as we kind of go through this transition period. Promo code May24 will get you guys into the Discord for just $1 on your first month. And then after that, you'll have to pay the regular monthly price. So sign up for that now while you can. Thanks again for watching, and I'll see you in the next video.